Hello again, it's Ken here from smartforexeducation.com. In the session today, I would like to discuss how I managed the position from part 2 of the trading setup of the journal that I have been documenting over the last few days or so. And what it is, it's a journal based on my experience as a professional trader investing in the Forex market. And what I wanted to do is take you through the entries, the management of the position, and also the exits of every single trade that I take, and give you a detailed documentation on why I entered the trade, why I had targets at a specific level, and at which areas I sold out. It's going to be very transparent, so I'm going to try my best at every opportunity to take or record or screenshots of the trades I've entered as soon as I've entered it. So it's not something that I'm looking to do after the event. I'm sure you're aware there's a lot of people out there that will do or show their trades and their results, 5,000 pip profit, basically looking in, after the event. When you get to a level where you've been trading like myself, running a hedge fund previously, you get to a level where transparency is very, very important, and you practice what you preach. So this is to show for people that are struggling with their trading at the moment, inability to initially have a plan and to stick to the plan. Hopefully this is the information I'm going to reveal over the next few days, weeks to months. It'll be able to help you in some way, shape or form. Okay, so let's get straight to it. It was a euro-dollar setup from the trade I took, part 2 of the case study. And first and foremost, what I looked at initially is I wanted to look at what the overall trend was. So we can clearly see from February the 27th we made highs, and we saw a strong sell-off to the downside, and then 2 days following that, so that was on a Wednesday and Thursday, which was on the 7th and 8th of March, we saw a nice rebound, so a retracement of where smart money individuals were looking to buy off a bounce. But what I did is, and this is so important for preparation, guys, is you need to prepare yourself where you can be proactive in a market rather than reacting to information or to some form of news. So what I did is I went to add, so lines, this is my chart. Just to go back, if you've missed out on part 1 of the tutorials and the screenshots, please go back to part 1 first before you move on to part 2. So I went to lines, add Fibonacci retracement, freehand, and I took a high, so it priced from a significant high to a significant low, and then I released. And then if I zoom out here, you can see my fib levels I have in place. So price held at the 50% retracement that I had, and this was on Thursday, so it was the high of Thursday, tested here very nice. So on Friday I was like, okay, the overall trade or the overall direction of the trade is still to the downside, and it was so important that if the continued move to the downside was going to continue, that it would have to hold at the 50% level, which it did on Thursday, the Thursday highs. So on Friday, I was aware, okay, Friday morning, put on my screens, went through my usual preparation, take a look at the fundamental news, going through my visualization, meditation techniques, which is very important for all traders, especially if you want to do this and really become profitable on a consistent basis. And I will give you some information about it if you wish. Please let me know. So prior to putting on my computer, I went through all of these techniques, but I had on Thursday night these levels set up already. And then if we zoom further into a 2-hour chart, it was roughly about 8 a.m. 8 a.m. we saw, okay, price held. That was very, very nice from yesterday's play. And then we saw start a rebound occurring here. So price got to a unique level of the 50% from the daily swing, and it found a strong resistance. And then you're going to find some sellers, smart money, so the professional institutions, commercials that were looking to enter short as a continuation move to the downside. So what I did is I located the opportunity and I entered the trade at 13220. Okay. So I went short. Spare me a second here. So number one, I went short on this trade at 13220, and I had a stop. I'm going to show you where my stop was located. I had a stop at 13293, and then I had two targets. Okay, so the first target was at 13190, and then the second target I had was at 13170. Okay, so I had two targets, and basically what happened, if price hit the first target, I'll sell out of half of my contract size, and then my stop will go to break even. Okay, and then if it hits the second target, then I sell out of all the remaining position that I had. So just to show you, this was a screenshot that I took, and it was at about 9:05 on Friday the 9th. So just after I entered the trade, so it was shown here at 13218. So just after I entered the trade, you know, like I said, I try my best for everyone to be as transparent as possible. So I took a screenshot after the entry and after placing my stop level. And the reason why, you might be asking, you know, Ken, why did you place a stop at this level? Well, what I tried to do is look at the technical errors of a level where you can place your stop, that if the price retraces against you and stops you out, then probably the market's going to move higher. So it's just above the highs of that 50%. And also you can cleanly see here on the 2-hour chart, we had a very clean doji. So Japanese candlestick reversal pattern above that high, and also on just around the 50% level from the swing high on the daily time frame setup. And then following that on the 2 hours, what I then did is I then put in some other Fibonacci levels. And Fibonacci plays a role in my strategy. It's not the only thing that I look at, but the way the market's been moving of recent, the Fibonacci levels have been working absolutely fantastic. So for the targets, I looked at next levels for target prices, and I drew in from different swing highs to swing lows, looking for some form of clusters. So as you can see, some levels here in place. And what I did is I had a target at 170, so I had a price. My last target was just above the cluster level 25.25 from the two swings. And then I also had another target at 90, which was just around the 40% to 40% from the swings. So my two targets, first target was hovering around the 40% swing. Second target was hovering around a 25% swing on the Fibonacci retracement levels. So guys, I hope you had an opportunity of being in a similar trade. If you did, fantastic. Congratulations. Well done. What we're going to be doing on the next few sessions, I'm going to also be going through some certain setups on a longer time frame and also shorter term. And I will be sending you some more information regarding the discipline part of trading. So if you have any questions, please let me know. But well done, happy trading, and have a fantastic weekend. Speak to you soon.